Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's September 23rd. This will be our chart listen for the day. And you can see we had a down day today. We closed off the lows, um, but we still closed lower, a good bit lower. We relieved a little bit of the overbought situation, but not completely so. Um, it wouldn't surprise me if we pull back just maybe some tomorrow and then still go higher. I would still expect we're going higher here. We are in the upper part of the band, but you can see the band is turned up really strongly as well. So we could turn over and correct here a little bit before we go higher, but I would guess we're going to continue to head towards this upper trend channel line. If we don't get there, that's going to tell us something. But at this point, I'd be shocked if we don't get there. So we were overdue for a little bit of a correction. So no surprise that we corrected today. It's not totally out of the uh, expectation. So because we were getting in the overbought territory, but as you can see, we've done that before, and you can get well above that line and continue higher. So um, you just never know how it's going to work out. But at this point, we relieved some of the overbought situation. We'll see what tomorrow brings. We could trade down again tomorrow, um, but we'll see what happens. So anyway, it's an inside bar today, and we definitely closed a good bit lower. I thought for sure we'd probably make a new contract high, even if we turned down today. The previous one was 67.56.75. And so we didn't quite make an equal high to yesterday. So we did not get another new contract high today before we sold off. So a little surprised, not completely, but this is not. I mean, again, we are in the overbought portion of the daily chart, so on the band. So no surprise that we are overdue for a correction. But anyway, there it is. Let's flip over to the 2,000 tick chart, take a look at it, and we'll work through the trades for the day. Okay, here's our 2,000 tick chart. We did have a news item at 8:45 this morning. We had PMI report came out, a couple of them. So I marked that off. And here's your big sell-off. It looks like we had a couple of legs. I didn't measure them, but they look like they're going to be, I would say this really started here. But we got way more than any measured move based on that. If we go all the way to the highs, still doesn't really change much. So, but easily we got two legs down. Then we work sideways into the close, closing near the highs of this sideways range down here. Um, Not a lot of trades today. Volume's still a little lower today. Um, Started off in this sideways range, broke out, continued lower, and then just started working in another. I mean, there's still a little bit of a downward bias here, but we're mostly working sideways. Anytime, keep this in mind. I say this quite often, and people don't seem to hear it, or they forget or miss it. But when the prices are consistently above and below the EMA like that, even if it's somewhat of a downtrend, um, you can trade that both ways and treat it more like a range. A downtrend should look like this, where you're mostly below the EMA, and here again. And then when you're back and forth, even though we're still kind of working lower there, that's more of a sideways type pattern. You can trade it more. You can trade it both ways. Just like up here, you can trade this both ways, and you'll notice a lot of times the EMA doesn't really come into play. It might momentarily, but it usually doesn't really hold or whatever. So that's another sign. But anyway, let's get into the trades here, and we'll zoom in a little bit where we can see this a little better. And 7 o'clock came. We're as we bounced here back up into on this two legs up. I'm not sure. I think it was, yeah, right there on that bar there. It made that. It's about the third bar up, and then we had kind of an inside bar. Then we had a close outside and a new high all in one. But that's just the first entry there. I would wait, and you got a double top there, I'd wait and see what happens. And you get a triple test here, and you still got room to get out. The problem was it didn't break lower on this bar, but that's still a bearish bar. So I wouldn't have a problem with you entering one tick below that. You stop still has to go above the bigger bar, above the swing high. But that's one of those kind of judgment calls based on experience, and if you see what's going on there. Sometimes you can kind of combine these two bars. I hate to say this because next thing you know, somebody will send me a trade they took where it looks similar to this, and they say, I saw you do this, and I did it. Why? It failed on me. Why? And so this is not something that you want to do regularly, but there's some situations with that being a triple test and with the 2-bar matching low, and there's only maybe a tick or so difference there. So if you took that trade, I wouldn't have a problem entering on that. I did make it green. It's a little aggressive. You need to know what you're doing, so I did mark it green. Then prices traded down. We bounced here. There wasn't enough room really to get out here, so I didn't like that setup. Otherwise, this would have been a fine trade, but it's just too close to the upper side. It ends up going higher, but you see it could have easily not stopped you out. And that took us into the news item. There was a second entry short here, but it's real close. I mean, it's like 5 minutes after the news, really. So let me just move this over. You can see that's a second entry short, a decent signal bar, a lower high. I mean, it's possible you might take that one. Well, didn't mean to put that there. But the better one would have been to wait till the next one, and then you got a triple test there, close to a triple test. But anyway, you could have traded that one right off the same resistance there. Very nice signal bar. And then you got a second entry short here. I'm not as crazy about this one because it's in the middle. But it's probably also going to act like a trap because we tried to go higher several times there, and they probably trapped some people. Odds are we're probably going to the lower side, so maybe you take that entry. Again, it's not perfect or anything, but it's one you might take. And then we actually bounced here. But what I think you have is another channel, a second leg working down here. And you don't really have a close outside and a new low yet. So I don't think you can go long yet. But it's 2 legs back up and it turns down again. Now you definitely got a triple test. I like entering there. Big bearish bar. I wouldn't enter on the engulfing bar. Wait till it closes. Go short there. And it runs on down. You probably should have got a runner. Well, I don't know. You might or might not get a runner depending on how tight you played it or if you played it +1 or whatever. But you might have got a runner on that. Generally, I tell people don't even try to get a runner on these tight ranges like this. So usually it's a waste of money. I didn't mark this one long because there's no close outside or new low or anything on that channel working down. So if you do get a break, move to a new low. No entries really down here. Notice you're still making lower lows and lower highs here, so I wouldn't attempt to go long because you may get that second leg down, which you do before it bounces. Now this is a higher low, but still it closes outside the lower support that we did have. You might argue there's a triple test there. I mean, it's one you might take. I just didn't like any of this right here because it looked like we were going lower. And then it kind of gives you a fake out and then does go lower, gives you a spike and channel down. So yeah, we're not really getting, you're not getting any real rejection here. And then it breaks higher, comes back down. Notice these bars are just hanging around, no real rejection. So I just wasn't crazy about it. It works, but I didn't like entering down here. Then it turns back down, and then finally it looks like we're going to test it a third time here, and it pushes through, and it pushes through again, and it's holding this support again, and then it just breaks bottom falls out. And so just no real chance to get in there. Now there was a first entry and then it turned back higher again. So that's a second entry when it goes past that, but I don't like the signal bar. It looks congested. Runs on down, moves up first entry, moves up second entry. Notice you get a closeout side and a new high all in one bar. It's such a bearish bar. If it breaks below that, we're probably headed to make a new low. So I like going short on that one. And it does end up taking out a new low there. And looks like we may reverse here, but we don't. Notice you got to move up first entry, and then there's a second entry short there, but that just looks sideways. I'd sit tight, and of course you get that. You do have a close outside, but no new high yet. That's another reason. It's tempting to go long there, but you can't go long right into that high. So let it run up, and then now it really looks like two legs up, and this is only like 6 ticks. Yeah, 6 ticks there. So that's a great place to go short. I like that when you're above the EMA a good bit, so you got plenty of room to get out before you get back. Just 2 legs up as well. Leg up, close outside, second leg up, and then it turns back down. You would expect to be able to get a scalp out of that at a minimum. You may not get a run or anything like that, and you're definitely not expecting it to take off like this, but it does. So, and that's the thing. Prices sometimes take off, and we don't expect them to. Just first entry. There is a hidden second entry there, but that signal bar is not good enough. First entry. Now here is just a first entry. First entry, and it close outside new high. Second entry, good signal bar. I like that one. And it's good for at least a scalp, and then it runs up another leg. It does very similar to how this did. Runs up, and so now you got another second entry there. It worked this last time, probably worked this time. Take it. Again, it's relatively low, 6 ticks, 3 bar matching high there, a little bit away from the EMA. And then we just start working sideways. This would be considered a lower high, but it's just a first entry. It's right in the middle of the range. I can't remember if there's room. I don't think there's room to get out there, but let's just verify that. No, there's plenty of room to get out there. I'm not crazy about it because I really thought we were going to reverse here. But you would still, we did have a break here and a new low already, but it wouldn't surprise me since we kind of came back and started respecting the range or the trend line again that we don't make another close and new low, which we end up doing that, but it struggles to get that. So you might enter there. After the fact, I didn't like it in real time, but looking at it after the fact, yeah, I do see reasons that you might take that trade. You're better off with the triple test, which comes here, and that's the better entry. It seemed like there were just enough ticks to get out there, now that I remember right. And that's just a first entry. Then we get a close outside and a new low, and then we reverse. No entry to go long there, but notice what happens again. We got 2 legs up. You should have entered, you could have entered below this one. I'm not sure which way this broke first. I think it went higher and turned down, so you wouldn't have to worry about the engulfing bar, but I can't swear to that because I was not watching the chart when this happened. So it could have ticked lower and then turned up. And in that case, it might have looked like a good second entry, although I think that's a good enough signal bar if that was all we had there. If you saw that on the far right-hand side of the chart and prices broke below it, I'd probably say, yeah, go short right there. But you can see we weren't quite back up to the highs yet, and we did make another push up. But again, I don't know if it broke higher first or turned down. I'm not positive. But if it did, usually what I tell people is, but it can be risky. If it broke lower first and then goes up and it turns out to be an engulfing bar, maybe you were just wrong and you're going to get stopped out. But if you feel confident in your read, I always tell people move your stop above the last swing high, which would have been right here. And that would have saved you even on the engulfing bar. And then you got a chance to, um, if you were already in. But if you didn't, wait for this to close, and then you could go short right there. Don't enter on that engulfing bar no matter which way it went first. But I mean, you could have gotten stopped out on this one if it broke lower first and then turned up and then came back down. But this runs on down, close outside. You get you get a second entry right there, but it's not anything you want to trade. It's too sideways, too congested. Then prices run down, first entry, and then when they reversed and runs up, it's 2 legs back. Again, that's a second entry long, but this is your signal bar. So I don't think I would enter on that inside bar. You do make another high or low, and I think this trend traded lower and then turned up. But again, I would wait on this bar to close, and when it does, it's right into the highs. So I don't think you can go long there. Then you get another 2 legs back, same thing. It breaks higher on a nice second entry, but the inside bar is or the signal bar is an inside bar, and this is technically your signal bar, this bearish one. So again, there's no setup there, especially at 230 getting, if you make a mistake there, you're probably in trouble for the day. So better off just to skip that trade. But that's how I saw it. Not the greatest trading day, but there's a few more trades today than there were yesterday. But for that amount of movement, it's not the best trading day. So, but there's nothing we can do about it. We can only take what the market gives us. And if we try manufacturing and making up our own trades, we'll end up with a bunch of losers. I can promise you that. So never try to manufacture trades. Always follow the price action. Let the chart set the trade up for you and give it to you, and stick to the rules. By being disciplined and patient like that, you're going to help yourself quite a bit. And sometimes that's the only real difference between a profitable and non-profitable trader, is just discipline and patience of being able to wait on the setups and not rush, feeling like you got to rush into a trade because you're scared you might miss it or whatever. So anyway, that's going to do it for today. I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.